Preparation, preparation, preparation. Well, preparation is key to so many things. And when it comes to home buying, preparation, knowing about what you need to prepare for is no different. Hi, this is Belinda. I am your Maryland realtor and I help people build generational wealth with real estate. So, today I am going to talk about how to prepare to buy your home, especially if you are a first time home buyer. Things that you need to be aware as you are preparing to embark on this wonderful journey. First thing that you need to know is your number. And when I'm talking about your number, I'm not talking about your medical numbers. I'm not talking about your blood pressure, your HDL, or your LDL, your cholesterol numbers. I am talking about your financial numbers. Do you know what your credit score is? Well, if you don't, there's always an easy way to find out. If you are, I'm assuming that you're living in the United States. As I say, I'm your Maryland realtor. You live in the United States, you are either a resident or an American citizen, you need to know that you have access to your annual credit report for free, at least once. And if you need to have it, during the year, then you will have to pay a certain fee or something like that. But anyway, you do have access to that. You do have access to your annual credit report. Your annual credit report encompasses credit from three of the only actually credit card reporting companies: Equifax, Experian, and TransUnion. Each will give you a number, but they usually are different. It's very rare that you find the same numbers on each of those three, but however, they are very similar. They may be off by a few points, but all the debt should be reported in very much of the same fashion. And having access to your credit report is not so much important just to know your number, but it is also for you to know exactly if the debts that you have opened those accounts, because if somebody can take your social security number and then open an account under your name, whether it's a credit card account, whether it's to buy a car or to make some major purchase under your name, and you don't have access to your credit report, it may go unnoticed. You may not know that somebody actually bought a car under my name and not pay that car because it did not affect them in any way, shape, or form. So have access to your credit report, and your credit report will be able to give you what each company is giving you as a credit score. Or better yet, if you do have a credit card, what you can do is to reach out to your credit card company. Most credit card companies will give you access to your FICO score. And FICO score, it's basically the average of those three credit report companies number. And the way that they will basically they factor based on those three credit companies. So they will give you a number. Your credit card company, as I said before, should be able to give you that number, and or you can work with your real estate your real estate agent, who will be introducing you to a loan officer, and that loan officer will also ask for your social security number to pull your credit. They'll pull your credit because your credit, as you may know it or maybe not, determine your worthiness of a loan. So the way that the lender will look at it, it will be basically ties your credit score to your worthiness of to look at you in such a way that, are you a really good person that we can loan the money and then know that we can get it back? So that they will look at it. And your loan officer has what we call a credit analyzer. So if your credit is not up to the number that it should be, they will work with you and tell you exactly what you need to work on, which things that you need to either eliminate from your credit. If you have to dispute something, especially if you have not opened that account under your name, you can dispute that, and then they can remove it out of your credit report, and that will boost your credit score number. Or if you need to pay certain debts, down to a certain amount, and that can put your credit score at a desired level for the lender to loan you the money. Because your credit score, and then this is where I'm starting first with the credit score, because your credit score ties into your interest rate. The lower your credit score will be, somebody might loan you the money, a company might loan you the money, but they will loan you at a higher interest rate. But the better your credit is, the lower your interest rate will be. And then you also want your mortgage to be at a lower interest rate. So knowing your credit is imperative. The number two thing that you need to do in order to prepare is to save money. Save money for your down payment and also for your closing costs. A lot of people just tend to think about, well, you know what, I'm going to save money for my down payment. And then when it comes to down payment, it doesn't have to be 20% of the purchase of the home. Based on the type of loan that you're getting, there are some different requirements. There are some different minimum requirements. And the way that most financial advisor would tell you to at least save up 20% is because of something called PMI, the premium mortgage insurance. Because if you have less than 20% down, you will have to pay that. You have to pay that amount, so which is an extra charge to your mortgage. So they tend to say that, just to avoid that PMI. However, you can have as low as 3% or 3.5% based on the type of mortgage that you qualify for. And then the type of mortgage that you qualify for also ties back into my first point, your credit score. There are some conventional loan that only requires a minimum of 3%. You have an FHA that requires a minimum of 3.5% of the purchase of the home. And you have USDA that requires sometimes, they will finance 100%. That requires no money, no down payment. And you also have the VA that have different requirements. But most of them also tie into your credit score. The FHA will tie to your credit score, minimum credit score of 580, whereas the conventional loan will have a minimum score of 640. 620, I think. So work on saving your money, and as well for your closing costs. Closing costs can be negotiated in such a way that you can have your realtor negotiate some of the closing cost payments to the seller, having the seller pay some of the closing costs or all of the closing costs. But I would say not to really bank on that, because it goes on case-by-case basis, especially when it's a buyer's market. Most sellers would not agree to pay your closing costs, some or all or some of the closing costs. So save up that money, and then when it comes to closing costs, on average is in the state of Maryland, it goes between 4 to 5% of the purchase of the home. So include your 3.5% as well as your closing costs of 4 to 5%. So I would say maybe save around 10% of the home purchase. And the third thing that you need to do is your employment. So make sure that you have an employment history, a consistent employment history for at least 2 years. So the way the lender look at it looks at it in terms of stability. Are you a stable person? Have you been employed for 2 years? Do you have a track record that shows them that you are able to continue the payment once they loan you the money? Because something happened to me when I first started working after college, started working my first job in corporate America. I thought that, I was balling and I was making so much money that I should go buy a house. And when I reached out to the loan officer, and he had asked me, how long have you been employed? And at that time, I think I was employed for like 6 months. And he told me that, well, you know what, you only have 6 months of employment, so let's wait. But that gave me also, I was glad to talk to that mortgage broker. It was a mortgage broker because he had helped me work also on my credit, which I had very little of credit. Work on my credit, and as I was waiting for that 2 year period, so I was also working on my credit and working on saving the money that I needed to have in order for me to purchase my home. So these are the things that you need to work on. First, let me recap. The first thing is that you need to know your credit score and then work towards on getting it better if it's not to the point that it's needed. And the second thing that you need to do is to save up the money for not only your down payment but also closing costs. And then the third thing that you need to work on is to keep employment for at least 2 years. And then one more thing on the employment. So if you are self-employed, they also look at your 2 years, your last 2 years tax return, because most people who are self-employed do not have a steady bi-weekly or semi-monthly paycheck. So they look at your 2 years and they want to see consistency. So what they require really is consistency when it comes to your employment, when it comes to basically your income level. So I hope that's been helpful. My name is Belinda and I help people build generational wealth with real estate. I'll talk to you later. Bye.